B waves are among the most difficult waves to track and trade in the market. Yeah, and Elliott Wave tells us that these are the corrective waves within corrections. They are really, really frustrating. And in this tutorial video, we want to talk about the relevant aspects of B waves, why they overshoot, what are the targets, and I want to clear up some misconceptions. So let's go. Yeah, hello and welcome to another MCO video. Today we want to talk about B waves. Now, the concept of B waves, they are corrective structures and they can be extremely frustrating. And I've prepared a chart for you here. This is the Bitcoin chart. It's the Bitcoin daily chart, and I want to show you a B wave that developed between 2021 and, well, the May 2021 lows and the November 2021 highs. And the question is, okay, what's going on here with this B wave? And first of all, what are B waves? Now, B waves are part of corrections. If you watched previous tutorial videos, then you know that already. These are technically the corrections in corrections, because here, this was a large correction that unfolded here on the Bitcoin chart between April 2021 and the 2022 lows in an A, B, C structure. And yeah, it is a correction in a wave 4, and a wave 4 can take different shapes and sizes and follow different patterns. Yeah, an ABC structure is the most common one usually. So it's just a standard corrective pattern. Can be a zigzag pattern, it can be a flat correction. Typically, these are the two choices. Now, of course, there are textbook patterns, but in practice, they are often not. There's not usually not that difference between a zigzag and a flat. Kind of, but there are many mixed versions as well. So the market isn't always following textbook patterns perfectly, but there is still that concept of B waves that you find in the zigzag, you find it in a flat correction, and you find it in different types of corrections, those mixed versions where you could might have difficulties to distinguish between it. Is it actually a zigzag? Is it a flat correction, or is it kind of half this, half that? But B waves, either way, they are the corrective waves in corrections. So what does it actually mean? So if you have a correction like the wave 4, there's obviously a counter trend move. In this case, it's correcting the uptrend that happened before. And in this wave 4 correction, we have an A wave, and then the B wave is correcting the A wave. That's why I said it's the correction in the correction. And then afterwards, the C wave decline. So, but why are B waves so difficult? Because that's what you often read, right? And they really are. Because, as I already explained, there are the flat corrections, there are the zigzag corrections, and you know already about the differences if you watched previous videos and the tutorials. But if we, first of all, a B wave, first of all, B waves are so difficult because they can take all kinds of corrective structures, like the shape, right? So, for example, a B wave can be a simple ABC structure, as it is in this case. Hold on. Can be a simple standard ABC structure, A wave, B wave, C wave. So this was a 5-wave move up in a C wave of B, but the B wave was a flat correction itself, and then 5 waves up in wave C. A B wave can technically also be a triangle, not the case here. It can turn into a more complex pattern, like a WXY structure. And then obviously there are flat corrections. This one is a flat correction, the entire wave 4, in which B waves can overshoot. So it is extremely difficult. So you cannot usually say in advance where will a B wave end. This is very, very difficult. Because from a, let's say, psychological point of view, it's important to understand what is that actually? What is a B wave? And it's often characterized by false hope. It's kind of an empty structure. It doesn't hold any substance, yeah, because the actual trend in this third wave, which is typically the most aggressive rally in a cycle, right? That third wave finished here already in 2021, and that was the end of the trend. And then a larger correction is unfolding. So the problem then from a psychological point of view, you never know, is this really the top of the third wave? Well, Elliott Wave, again, I'm not going to get into that, but there might be clues here and there. But the problem is that traders, investors, they might think, okay, we have a third wave top, finally a pullback. A lot of people missed the boat here on the way up, so they finally buy into this pullback. And they think, they hope, and it's all driven by fear and greed, right? And hope and whatever, all these emotions that cause people to make decisions. They think the rally might continue, the trend might go up, yay, new all-time highs and so on. But it's actually not part of the trend anymore. Yeah, it's just a reaction, like a dead cat bounce, that's what they call it, caused by hope. Okay, so it's obviously that uncertainty. There's a lot of uncertainty in these waves because investors don't really know, are we already in a downtrend? Difficult to say. And then it's even pushing to a new high. So, hey, people hope for 100,000, 150,000, but actually this is part of the correction. So B waves are really, really tricky, but that's also what causes them to overshoot sometimes, not always. Yeah? So there is that hope, that mixture of hope and uncertainty that makes it so difficult. And we know that especially in a wave 4, you very often get overshooting B waves, especially also in the cryptocurrency sector. It really depends on the sector as well. Each sector has its own characteristics. Yeah? So this is definitely something to keep in mind. When we talk about Fibonacci targets, what is a target for a B wave? That's the next reason why B waves are so difficult. They technically don't have targets. Yes, there are standard resistances, but normally we say when we're tracking a zigzag correction, this is not a zigzag, but when we're tracking a zigzag, normally standard resistances, you would expect the 38.2 retracement to the 78.6 retracement. Now, this is not a zigzag because the decline was in 3 waves, the A wave. Yeah? When the A wave is in 3 waves, you would assume it's at least a flat correction. I mean, maybe the trend isn't over because we never really know. Yeah? It's all about probabilities. But when we have a 3-wave move down, it's already a heads up that the rally might be aggressive because we know that in a flat correction, at least based on textbooks, the wave B should at least reach the 88.7 retracement, in this case 59,500, at least. Shouldn't normally break above the 138% retracement. So the 138% retracement of the A wave is typically the maximum of the B wave. Now that again, not nature, it's not a law of nature, yeah, it's not physics, it's not that this has to be the case. I have seen B waves that in exceptional circumstances did overshoot much more. It is extremely rare, however, so we're dealing here with probabilities, yeah. The main takeaway is don't see it as a dogma, it's not, there is no rule that says it can't be a B wave if the price goes above that level. As long as it is a corrective part of a correction and it doesn't continue the trend, it can be a B wave, even if it overshoots, as long as it's a 3-wave move, yeah. But normally it shouldn't break above that level, so it's kind of a theoretical maximum. Yeah? I rarely see them go above it, but it does happen. So it's not an absolute limit, yeah. But this is very, very important to understand. But yeah, you see that technically that means sometimes it's not even clear, are we dealing with a flat correction, are we dealing with a zigzag? Because the decline might be interpreted as 5 waves or 3 waves, so it's not entirely clear. So that means you're dealing with a range between the 38.2 retracement and the 138% retracement, a massive range where that B wave could top. So it means that in a B wave, typically it means you need to be careful when trading it. It's challenging to track. These are the most difficult waves to track. Normally you prioritize risk management and capital preservation more than in other waves in a B wave. Some people avoid them altogether. They are really unreliable, and that in itself, Elliott Wave tells us when we're likely dealing with a B wave. So that always is a good heads up, yeah. But also Elliott Wave has limits. It can't tell us exactly where that B wave will land. There's only that area, and we know. And that's one of the main benefits, that we can recognize a B wave when it's likely unfolding, yeah. You can't expect a crystal ball, but you can expect that like a warning, okay, we might be in a B wave. That's actually a huge, huge benefit from understanding price structure. So, and it's driven by uncertainty. That B wave is driven by uncertainty and hope, and it's like that market sentiment after a third wave, which is typically so aggressive that people think, okay, is it already the 5th wave that's unfolding? Are we still in the 3rd wave? People don't think that way. Not everybody's using Elliott Wave, right? Not everybody's using Elliott Wave. But from a mindset point of view, people think the trend is still ongoing. So yeah, it is about understanding that, yeah, and also understanding those fake outs are very, very common, especially after a massive run in a 3rd wave. So that is very important. So that should give you an answer why B waves tend to overshoot. Also, don't be too, don't put them into a box, these B waves. They are chameleon-like. I often say they are chameleon-like structures. So they can really be very small. They can be massive, and I often warn about these B waves and their structures and their flexibility. You think it starts as an ABC and suddenly you're dealing with a WXY structure, or it morphs into a triangle or something. So don't assume a structure too early. Stay flexible. And whenever you have a 3-wave move complete in a B wave, reached standard resistances, be careful. And especially when you then see a first 5-wave decline or something, or a break of support, these are the warnings that the C wave down has started. So hopefully that helps you a little bit to understand more about B waves. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure to subscribe to this channel. Also check out our membership options if you want to learn more and get an update about crypto charts or stock charts. Thanks so much. Bye-bye.